Vaibhav Sanghavi joining us this morning, CEO, ASK Hedge Solutions. Vaibhav, always a pleasure to speak with you. Thank you so much for joining in. GST or tariffs, what's going to be the biggest factor or bigger factor for Indian markets?
I think both are equally important, and the reason is basically that GST, of course, will induce good amount of consumption. And while we talk about our GDP configuration, we had investments as a bucket which was firmly in place for the last 10 years in that sense. Whereas this is the post last general election, I think a concerted attempt in terms of reviving the consumption, has been undertaken by a combination of central government, state government, and probably central bank as well. So when you see that the second biggest pillar of your GDP configuration kind of starting to move in is when GDP growth is likely to be better. Now, of course, in the last 2 quarters, we've seen those kind of positive numbers, but I think we will gather more pace as we go ahead. Lastly, from a tariffs perspective, it is equally important, purely because the third component, which is your net exports, is quite dependent on that. And more so from a sentiment perspective as well, it kind of helps from an FPI investments into India as well, which currently we are seeing sizable negative numbers.
Got it. Vaibhav, good morning. And if you had, I'm presuming you have a long short currently per se, but if you had the opportunity to be naked long or naked short right now with a bit of a hedge, which side would you be tilting on? I'm just trying to get a sense of how constructive or how negative you are looking at all that's happening, because there are two very, very powerful and opposing forces at play here, and one is imminently in the next 2 days, which is very constructive.
So Neeraj, great question. Now, the way we are positioned currently is basically we are quite neutralish from a net exposure perspective. And the reason, as you rightly mentioned, is two kind of opposite forces from a market standpoint. Now, while that is the case, what is more important is basically that when you have the ability to do long short, then on one side you can play a hugely positive theme, which is a consumption driven theme. Whereas on the other side, you can also play simultaneously something which is driven by large FPI selling as well. So the pockets of where the ownership of FPI lies is something that might continue to be under pressure for some time. So it gives us some nice opportunity on both the sides while keeping the exposure pretty neutralish.
I'm wondering if you are looking at the GST bit. Let me just focus a little bit on it. Looking at the kind of pop being expected from FMCG staples with a bit of trepidation or a bit of cynicism, because are we really going to see that impact of demand coming in for FMCG staples because of GST cuts, and they will undoubtedly be the biggest beneficiaries? Do you think that will translate?
See, of course, GST is going to benefit from an overall perspective, but I would rather see that it as an incremental big step towards working towards a common goal in terms of inducing consumption. Now, this is not something which is an isolated measure. I mean, if you go back from a year's perspective, you will see that the state welfare schemes plus your central government's income tax benefits, and lastly, from an RBI perspective, decreasing interest rates, along with increasing in terms of the liquidity. And this adds on to those kind of measures, which clearly states that government is in a mood to do whatever it takes to kind of get the consumption basket going. So I would view from that perspective, and I think from the next 12 to 24 months, I do think that it's a great play to kind of be in terms of the portfolio. Lastly, when you talk about FMCG, I think more importantly, it will be that at the same price point, there will be volume growth. So you will see those 5 rupees, 10 rupees kind of package kind of stuff. There, the volume growth will happen rather than price decrease will happen in that sense. So, and you know that FMCG kind of gets triggered in terms of the positive momentum looking at good, decent, volume growth. And lastly, from unorganized to organized, also getting much into play is when we see that the this basket is likely to move ahead going forward.
Got it. Vaibhav, the, the, the second tier beneficiaries have started to, make the moves, if you will. So if auto sales are going to happen, we've seen tire companies, presumably because of that, starting to make a move. Select auto anchors have come on the channel and said that they are very constructive on what the demand uptick for autos could mean for them as well. Is there a second order, third order play here because of GST alone? Considering it's going to be such a such a big move, for lack of a better word, such a big impact move.
No, of course, Neeraj. I think there will be a second order impact as well. And when you talk about auto anchors, which is rightly so, you can kind of segregate the sector between those guys who have larger domestic plays vis-a-vis your exporters, right? So focus on those guys who are domestic oriented. And when you talked about the tire companies as well, I think what has also helped is basically that decrease in terms of the rubber prices also kind of help or aiding them in terms of the raw material input costs as well. So in all perspective, those guys who are focused on two-wheelers and four-wheeler segment and an economical segment in terms of supplying from an auto anchors perspective in the domestic side, you will see a good play going forward, at least in the next 3 to 6 months.
Okay. In terms of autos specifically, Vaibhav, do you think that that big boost is going to come because of GST rates? I mean, there's just two streams of thoughts on it. If you do have some segments which have inelastic demand, then GST up or GST down is not going to make too much of a difference. But for maybe lower priced passenger vehicles, for example, will it really give that kind of a boost? Because PV segment has been flailing.
Sure. So I think let's step back and consider what had happened in 2009-10, right? When we had seen at that point in time a stimulus in terms of the decrease in terms of the excise duties. And post that decrease in the excise duties, you had seen the next 2 years or 3 years that the volume growth, was pretty strong. Now, I'm not saying that that is the similar kind of volume growth numbers you may see going forward, but I think the direction is pretty clear. These things really help in terms of increasing the demand on an overall perspective, and rightly so, as you rightly mentioned, that the lower denomination kind of PVs or two-wheelers are something you will see the first kind of buoyancy in terms of the demand. So I am looking forward to it, and hopefully in the next 2 years we will see that kind of increase in demand here.
Vaibhav, the other thing is just consumption enablers, right? I mean, and what happens? So one is, of course, distribution or logistic companies, and is there a play there? The second is the platform names, right? And independent of what happens on GST, Zomato, we learn, Zomato, which is a part of Eternal now, gone ahead and has high platform fees. We've seen Swiggy do that, etc., etc. So are these consumption-related names out there which you might be constructive on?
Yeah, of course, Neeraj, I think the whole platform plays, right? And we've been constructive for some amount of time. The reason is, yes, the government is helping in terms of consumption, but from the business models perspective, I think these are the guys who are grabbing market share in the traditional industries as well. So those guys who, on the power of technology, are continuously grabbing the market shares, plus turning profitable or having the visibility to profitability. My sense is basically they will keep on doing much better than expected going forward as well. So we do view the whole segment very constructively, including your logistics player, including your other platform, restaurants, consumption plays. I think technology here is an enabler for extremely strong market capture.
Okay, and something that we'll keep an eye out for sure. Vaibhav, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time.
Thank you.